we have here Mr. Melvin Esteban, a bona fide expert on investments, talking about the stock market. You talked about earlier, you mentioned the parting shots was speculative. These are fundamentally unsound.
Yes.
There you go. But how many stocks are there? What kind?
Well, basically, there are different kind of stocks according to risk. No? The highest echelon would be called the blue chip. No? These are
senior ones.
the most stable ones. No? The bluest of the blue. These are companies like Ayala Corporation, BPI.
Your top 50. Top
Yes,
100.
yes. They're very stable. They have a very good and proven track record in terms of earnings.
Highly profitable. I guess.
Highly profitable. They give out dividends. They give out returns to their stockholders. No, so these are the type of stocks that if you put your money in these kind of stocks are pretty lower in terms of risk. No, because you're sure that they're gonna be there in the next 40 to 50 years. No?
Blue chips, PLDT,
Ayala, SM would be a good stock also.
and the big banks.
Yes, yes.
These are
Meralco, of course.
These are like a really
Yes.
giant corporation.
Yes.
Conglomerate.
San Miguel, no? San Miguel.
San Miguel.
Ibang may pinagsamaan.
Okay, so they're there. You know, ideally, the next 20, 30, 40 years, they're still here.
Yes.
They're profitable. I guess even when the economy is not good, they do well.
Yes, they will. Even if they don't do very well, you're sure that they're gonna survive. They're still gonna have some profit. You know, it's just not probably not as big as when a good year comes in.
But they're still there.
Yes, yes.
So
The second one would be the second liners. No, these are the type of companies that are, that are good, stable enough, relatively new in the market.
Okay.
So
not as old as
not as old or not as proven as the others, no.
Called the second liner.
These are called the second liners. Some people still goes to this kind of stocks because the potential for growth is much faster.
But I think for blue chips, of course, the potential for volatility is not as.
Yes, and in terms of growth, it's also not gonna be that fantastic. Let's say, for example, let's take the case of
higher yield,
high return, potential return.
Yeah.
Again, always emphasis on the word potential.
Okay.
When you talk about, let's say, Meralco, it's a blue chip. You would expect year in, year out that they would have consistent profit. But, they're not the type of company who will make a big profit in 1 year because, at the end, their growth is only so much. No? But for example, you talk about, let's say, second line companies, no, second tier companies. ABS-CBN would be one, no. First, its counterpart, GMA7. First Philippine Holdings. These are growing companies. These are the type of companies that are still in the eagle stage, that they can expand rapidly, and opportunity will be there. Since they can expand very fast, no, potential for high return will be there. Unfortunately, potential for loss will also be there. No? But
so again, that's relative.
Yes, but relatively they're diverse enough compared to the last one, which is called the speculative stocks.
So blue chip, second
line, and the speculative.
Everything else is a speculative.
Speculative, no. A lot of this one, though not all, no. These are the oil stocks listed in the Philippines. Some of the mining stocks. Again, no, if this mining company, start, let's say, a specific project, they will spend a lot of money, and when they drill and there's nothing there, definitely they lost a lot of money.
Or when they
strike something,
their
your potential for return is probably 300% or even more. No? So
which you won't get probably.
You probably never get it in a blue chip or in a second liner.
So speculative, these are those that can have a potential for big
return, yes.
And big loss.
Yes, yes. In fact, if you're somebody who's starting to look at stock market as another investment, I always suggest to go to the highest tier. Always go to the blue chip first. Now, make yourself more aware of how the dynamics work. Yeah. So that way, if you make a mistake, at least it won't be too costly. Second, what I advise is, if you go into the stock market, always go there for the long haul. Go long term.
The
Don't
stock market is a long-term
Yes, a long term.
instrument.
And a lot of people always look at the stock market like a place for them to gamble. Eh.
Yeah, and then
They go
buy
there
lows
and
high.
yes, and 1 month later they will sell. No, that's a worst way for you to invest in the stock market, because you will end up just paying a lot of commissions to the broker, and you won't be able to capitalize the uptrend of the market.
Yeah, when we get back, I'm gonna have some tips for newbie investors, what to look for, and signs on the stock market. Going back with Mr. Melvin Esteban.